What if you could lend money to the safest borrower on the planet and get paid interest for decades? Well, the easy answer is invest in treasuries. These are debt securities issued by the US Treasury that last anywhere between a month for T-bills to as long as 30 years for Treasury bonds. They essentially serve as a way for you to lend money to the United States government. And with that debt comes interest. The US government currently pays bondholders a fixed interest rate, and today it's around 4.8, 4.9% annually for the 30-year bond. The bond value itself will go up and down over time, but at maturity, you'll be paid the par value, which was the initial value of the bond when it was issued. The payments are called coupons, and they represent the income that you get when buying the treasuries, and they're paid twice a year. And here's the kicker. They're not one of, if not the safest investments around. Unless the US defaults on its debt or ceases to exist in the next 20 or 30 years, both of which are extremely unlikely to happen, you can expect your coupon payments in full and on time. Treasuries won't make you rich overnight, but they do give you safety, stability, and a predictable income. And another problem? Locking up your cash for 30 years might feel like forever. So what's the workaround? That's where bond laddering comes in. Bond laddering means buying bonds with different maturity dates. As each bond matures, you take the proceeds and roll them into something else, another bond or maybe a stock or something else. So for example, let's say you invested $10,000 in 3 bonds, one that matures in a year, another in 2 years, and the third in 3 years. When the 1-year bond matures, you can use the proceeds from that to buy a new 3-year bond. That way, you always have bonds coming due in 1, 2, and 3 years. And this creates a rolling cycle where a bond matures every year, giving you consistent interest payments and some protection against sudden changes in rates.